Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, September 20th, 2019. Members, I'm going to try to get either a video or some charts out on the precious metals, gold, silver, platinum, as well as treasury bonds, those risk-off assets. I'm still liking those right now, and wanted to do an update there. We'll keep this one short and just limited to the equity markets. All right, so to follow up from last night's closing wrap, those trend lines broke down. These are just minor trend lines. We really can't read too much into this. I mean, it is a breakdown, and we closed right about on support. If you recall, in last night's video, we had a 191 support right here on QQQ, which we closed a hair below today, but it was a pretty impulsive break. But bigger picture, really can't take too much from today. Yes, the Qs were down 1%. But they're still within spitting distance of new all-time highs. Now, nothing has changed in my outlook. Please don't get me wrong. I think I still see it best, maybe a couple percentage points higher if we pop next week. But whether we do or not, you know, I still think we're headed lower from here. Now, we need to break those trend lines from the lows on December 24th right here. Yeah, that uptrend line has been kind of sliced through. It's not super well defined on QQQ, but we also have that trend line on the very important XLK tech sector right there. There you go, those trend lines. So really, we need about this much more downside, and that should get things going there. Once tech breaks down, QQQ and SPY and everything else will follow. We've yet to make a marginal new high in tech and QQQ, which again tells me something. You know, this S&P 500 has made 2 new highs this week, intraday highs. You know, we had a previous high right here on July 26th, and then on Thursday, last Thursday, we popped above it and then failed. We made a marginal new high, failed. It's not what I would call bull trap because it wasn't an impulsive breakout. Look, you know, still, you know me. I think we're going lower. I think the upside's limited. We've already back tested this trend line in SPY. Then again, yesterday we popped, but it wasn't an impulsive breakout. In other words, there weren't a lot of trades that went on up above that level to say, wow, that's a powerful bull trap, a breakout to new highs, trapped a lot of longs. We can't really say that because these just popped intraday briefly and fell. However, what it did do is it gave me that extra, you know, marginal new high, divergent high, extended the divergence, and again, very clear and simple, nothing has changed on the technical posture of the markets now for really since this last high right here. We had a divergent high at that point. We had a correction off that initial divergent high, and we continue to diverge. We have a series of 1, 2, 3 lower lows on the indicators, RSI and PPO. There's RSI, versus a series of 1, 2, 3 higher highs, and that's your negative divergence. So really, this should be put. Oh, it does say it there, DH. And that's it. And we also broke below the trend line on SPY there, where some red candles today. Let's look at what happened. I want to show you a post that I made in the trading room earlier today. This chart, I took a screenshot at about 12:34 today, and said here at this level, about 190, 120, 191.72, all post FOMC gains will be faded below this line. So that was right here at the crosshairs. That's where we were at 2 p.m. So right after the Fed, had a couple knee-jerk initial reactions, then a big down, then a big up, and so everything from this point here above, that was everyone that bought in after the Fed announcement, including those that popped the the marginal new high. And so that's a significant level, because all those that thought, okay, it's safe to get back in the water, Fed's out of the way now, the market decided it's going to go up, that would be a big level. So that was then 191.72. You can see we hadn't yet hit it, and let's take a look at what the 1 minute chart of QQQ. I'll show you what happened there. There it was. So we were right here at that point. There's the crosshair. There's the 2 p.m. FOMC meeting last Wednesday. We hit it perfectly, bounced, and we kind of set up this downtrend line right here a little bit. I'm going to move that out of the way now. It's not too relevant. It's a 1 minute trend line. And you can see just a big impulsive move down. Somebody in the trading room, there might have been some headline, but the headlines will often coincide with technicals. You'll find trade long enough, and you'll never fail to be amazed how often the market's approaching, or a stock is approaching a key level, whether it's a bullish or a bearish chart pattern, and then boom, a headline comes. Sometimes the big move like this is purely technically induced. Sometimes the catalyst is some type of headline. Again, I don't even really pay attention today to the news, but that's what happened. And you can see it's no coincidence that we bounced off the initial tag of that level. Boom, and then once we broke it, an impulsive sell-off, and nor is it a coincidence we rallied back to it and then failed. So that's a level to watch. And right now, so all this means, not trying to read too much in today's short-term stuff, but it does tell me that all those that bought and above the FOMC announcement, where the market was when that announcement came out, they are underwater. In fact, most anybody that bought on that day, because we closed not far off the lows, so only these people that happen to catch that low, only they right now are not underwater from the other day from where we closed. So that's bearish near term. And again, intraday chart stuff, but it's how technical analysis works. This is how I read the charts, trying to look and see, because that affects the psychology of traders, especially those active traders, weak hands. It's not going to affect somebody that's been holding QQQ for the last 5 years. That's insignificant to them, but it will affect that big subset of traders, whether they're individual, retail traders or institutional traders. They are now underwater. And what it also shows me is, if you look at the talk about those trading ranges again, a couple things. Remember, we had a lot of energy built up in the August trading range, went back and forth, and as I said, that's like a coiled spring. Now normally what you would see on an upside break of a month-long, it was over a month-long trading range, would be impulsive buying. Usually you see after the market consolidates like that for so long, an impulsive move. We didn't see it, nor am I surprised. As I said, and that's didn't really concern me as much as it might normally, because there was the charts are overwhelming. We have divergences, as I said, on every time frame from the daily chart out to the 60-minute chart. And again, if we happen to make a marginal new high next week in QQQ, which has yet to do so, and again, that tells me something. SPY has led. SPY already made marginal new high. In the S&P 500 is full of your defensive issue stocks. These are your market leaders in here. QQQ is much more heavily weighted in the market leaders, Amazon, Microsoft, Alphabet, and those kind of stocks, and yet it's lagged behind. QQQ is right back to just above the August trading ranges, where SPY is still comfortably above there. So again, I can sit here and talk about it all day long. We're not, we're within striking distance still of new highs, but again, I strongly favor more downside in the coming weeks to months, regardless of what happens next week or in the next couple weeks here, if we happen to pop up and make a marginal new high. If anything changes, such as these divergences and everything else, you can see we have a pending bearish PPO crossover on both QQQ and SPY. Those are, and when you put up a histogram here and it'll show you, these are the crossovers. And I like to look for clean separation when you have a trending market and you have these big, we'll call them hills on the PPO, and then you get the bearish crossovers. You get corrections usually come afterwards. And here's the last big hill we had right there. We made a bearish cross right here, right around the time we made a divergent high, and we had a pretty healthy drop there. And right now we haven't yet made the bearish crossover. When these lines cross red, that means the PPO lines will cross, and it will again confirm the divergence in SPY right there that we have right now. Quick look at the futures. NQ, NASDAQ 100 futures, 60-minute chart. Remember, we had this 60-minute uptrend line right here, which was recently broken, and before the FOMC meeting we back tested it a couple times, kind of traded mostly sideways after the FOMC meeting. We had negative divergence here. Should we pop next week a little bit higher, we're still going to have negative divergence. That's guaranteed if we make a newer marginal new high next week. These indicators couldn't possibly, again, if it happens early in the week, they could not burn through there. Now, if we keep going up, much more than just a marginal new high, you're talking 5-10%, sure, they can be burned through, and then you don't have the divergence. Here's your previous highs in the NASDAQ futures right here. So there's room for that, but again, what I'm seeing is just this market just looks tired. It's been trading, I've talked about, we've gone nowhere really for almost 2 years now, where the S&P 500 is about where it was back in the end of January 2018, and here we are, heading into the almost the end of September of 2019. So there's the levels we broke down today, and had the reversal, and we came just shy of that 77.92 support. Remember, on NQ, the NASDAQ 100 futures, we've had multiple tests. This is the trading range, the August trading range right here. And we broke above it. We back tested it once, twice, 3, almost 4, and almost 5 today. Today we stopped. Traders were probably focused on that previous reaction low, which is a hair above that level. So what we'll watch for next week or going forward is a break back down below there. That would be pretty bearish if we re-enter that August trading zone. Now, keep in mind, I think that will happen because ES has not even back tested yet, and at minimum I favor ES coming in. Even my most bullish optimistic scenario would have at some point soon ES coming in to back test the top of those trading ranges again. And you can see on ES, here's the top of the trading range, runs from about 29.39 up to about 29.46 or so. And as I said, ES broke out and hasn't looked back, has not back tested that yet. If it does, that's a drop of about, I think it's about a 2% drop if I'm not mistaken. I'm going to need to move that line there and measure it out for you. That would be depending on where you hit it, about 1.5 to 1.7% for back test. I have a sort of a range on the top there, and so that's what we might look for next week. If that were to happen, 1.5 to 1.7% drop, it is going to take NQ back down below the top of the August trading range. So just keep that in mind. So we'll watch ES bulls. Maybe I'm wrong. Maybe we never even come back in there. But if we do, bulls want to see it defended. They want to see that. And if you're bullish and think the market's going to new highs and well beyond, if we get that, that's your buying up there. I mean, support doesn't get much better than that. That was over a month-long trading range right there, and hasn't yet been back tested. So there's your levels to watch. Now, if you're bearish and we go on through there, I would expect at least a bounce off the initial tag from above if we get it, but from there, if we enter that, QQQ should be well within its trading range, and I think we'll just continue on down lower. It might not be an immediate waterfall sell-off. Really, it would, same thing I was saying back here when we were in the range. You really have to take out the bottom of the range. These are the key levels right here. About here, let me grab a line and put it here for you. It's probably a little premature, but you never know. Sometimes the markets can move fast. It's about 28.20. It's not the very bottom of the range. We overshot it here, but on ES in the S&P 500, we had about 3 tests to the bottom of that range after that initial overshoot, that little knee-jerk reaction there, or overreaction, I should say. And one other thing worth noting, we'll end it here, is I pointed out yesterday we had, what was it, I believe 5 or 6 stocks in the NASDAQ 100 hit 52-week highs earlier in the session. All 5 or 6 of which, all of them reversed and closed back down below those previous highs. Yet Microsoft, and most of them closed red, I believe all but Microsoft. Microsoft managed to still close green, although it failed to close above that previous high back here from late July. And today, a pretty big down day, about 1.16 on it. Not the end of the world. Here's a trend line off the lows on December 24th, but it's been sliced through. So we have this minor trend line still. It needs to really take out. And if you want to look at it this way, Microsoft has kind of been topping here, in what seems like a trading range right here. This is the trading range. That's just was resistance there, popped above it, and so we're working our way. This was the strongest stock and has been in the NASDAQ 100. It was the only one recently that made new all-time highs yesterday. And you can see that it did so, but it's really just kind of moving sideways. So let's see where this one goes. Obviously, a break below that range would be bearish. If it can make a solid break above, it's not going to change the technicals anytime soon. That's all I can say. We're going to simply extend these divergences that have been building now for all the way back from this point. We've been building divergences, so there's plenty of room if it wants to lift up a little bit and maintain similar to the broad markets, maybe a little more on Microsoft. It's an individual stock. Maybe it has 5% or so, but I think the upside's limited and certainly not worth it. To me, the risk reward is not attractive to be long. It's more attractive to be short if this stock were to suddenly reverse and start moving down quickly. Or play it safe, just wait for some sell signals. You don't have really any solid sell signals here on Microsoft or any sell signals at all. But I can tell you, let's just put a line right here. That was the bottom of the range, 131. That'd be my magic number for Microsoft. That was, I don't, at the risk of oversimplifying it, but we had failed there at 131. We broke out. We successfully back tested it. We tested that again. That was a breakout to all-time highs in Microsoft, and we tried to break out. Well, we had a breakout to all-time highs there. If that fails, come on in here. The stock needs to hold 131, or it's going a lot lower, in my opinion. And that would be, I won't even give targets now. We'll just take it as it comes. Hasn't even happened yet. Just levels to watch for next week. So let me go ahead and wrap it up here. You guys have a great weekend. YouTubers, as always, thumbs up are much appreciated on the YouTube channel.